Reginald, we've seen the NSE 20 share index today shared about 21.23 points to stand at 3,607. The rally seems to be slowing down what we witnessed last week and the previous week. What's happening? Who's bringing the markets down?
Not really who is bringing the markets down, but what is bringing the markets down. Because if you notice the phenomenon that is happening, it's normally called a supply effect, where prices of a few counters start coming down and triggers profit taking on all the other counters. But people now consider, if prices come down, let me book my profit at this price, because clearly it's not going up. So you'll find where supply starts becoming more than your demand. Like today, supply in terms of the shares traded was around 2 million, and demand was only at 1 million. Actually, if the percentage is 153%, supply more than demand. So as long as that phenomenon starts trickling in during the whole week and prices start coming down and people start booking profits and making sure that they are in their positions, we'll see the market trend down further.
Financials dominated activity today, 46.79 of the day's volume. That's ahead of the results as they begin to trickle in next week. What counters are you looking at?
We're looking at counters that we believe were not treated fairly last year. I'll give an example of Equity Bank, which was not really, the comparison year, which was 2008, was rather too good a year for them because of a one-off item, which was the Safaricom IPO, which they handled most of the business. So if people compared the 2008 and the 2009, people started seeing like Equity Bank did not perform well. But actually, if you normalize their returns, they actually did well. So you're looking at counters like Equity Bank, we expect them to have a good year this year. You're looking at your counters like Standard Chartered that continued to outperform the whole market last year. I think their third quarter results were around 143% increase, which we believe will still trickle into this year. You're also looking at a bank like National Bank of Kenya. I believe this year actually they will declare a dividend. They've turned the corner, even with all the noise around them. They've actually been able to do well. Diamond Trust, with their focus on SMEs and SACCOs and their regional expansion, have also been managed to weather the storm.
What other stocks are you looking at? Agriculture seems to be quite a favorite when the year began, but they seem to be dwindling in terms of interest.
Yes. Last year, agriculture, basically, the earnings were more of artificial. It was because of a supply shortage, not of an increased demand. So it's not a sustainable revenue for them, for someone to actually move in and take into position. But if you're moving away from your financials, the next best place you would look at is your advertising companies. As we expect the economy to grow this year, the only thing that differentiates companies in Kenya is how best you advertise. So we expect them to have at least some earnings coming in.